latest edition of the Allica Bank Brokercast. I'm Jonathan, one of the business development managers in our commercial mortgage team, and I'm joined today by Niv, our Chief Lending Officer. We're going to talk today about the role of technology and how it can transform the commercial banking experience, particularly for brokers. Niv, I think a great place for us to start would be the differences between consumer and business banking. Over the past few years, we've seen significant technology growth within retail banking. Why do you think some of the banks have struggled to bring the same advances to business clients?
So I think I'd probably start with just the fact that businesses are just much more complex as entities themselves than retail and consumers. And actually, if you see the development of digital and technology within simpler businesses, some micro businesses like single person, single director, sole traders, it's actually not that far behind anymore.
Yeah.
Whereas if you take the types of businesses that Allica works with, some more established businesses, you've got, different entity types. You've got everything from sole traders all the way up to trusts. You've got businesses that need different types of permissioning within the people that operate within that business. You've got current accounts that require mandates that are set at pretty bespoke levels, all the way through to lending where data is very, very different structures. You've got a group entity, multiple entities within, and you have to cater for all of this to do that well. So I think there's quite a bit of complexity, and that prevents it from being a very easy lift and shift from the retail banking world. And I think because of that, if you look at the challenger banking space, there are very, very few that have managed to do what the likes of Monzo, Revolut, Starling have done in the consumer and simple business structure kind of banking through to the more established SMEs. And if you think back to retail banking a number of years back, I think retail banking as a whole is where we are because of these challenges. So you need the challengers to actually wake some of the bigger banks up and actually make them do stuff. And I just don't think we've had that same level of kind of competition or drive to actually focus on that really hard problem to solve, which obviously we at Allica are doing.
Absolutely. And why do you think it is that it's some of the newer and challenger banks are able to address this, whereas some of the incumbent lenders are finding it a bit more of a challenge?
I think it comes down to just your existing technology stack. It's quite easy when you're starting with a blank sheet of paper to build something using all the developments that we have access to today. When you're starting with a system that maybe was built in the 80s and you're looking to upgrade that while at the same time, combining that with other newer technologies, it's just far, far harder. And I also think SMEs in larger banks is that division in the middle between consumer, very digital, large volume, and corporates, which are very bespoke, completely manual, and that's fine because they need that. And so SMEs always are that in-between kind of segment where it's a bit tricky to justify really shaking up the existing technology without doing the others first.
So the combination of that customer that wants the advances and the easy technology, but doesn't quite have the ease to serve the micro businesses perhaps one person does. Thank you. And could you just explain a little bit about how technology should be used differently in business banking compared with retail consumer banking?
Yeah, and it's a great question, right? Because I think in particular, I do think it depends on the business that you're serving. I think many customers and many businesses, ultimately businesses are people that run it. And people in some sectors, in some segments, in some businesses do prefer that their consumer bank and their business bank, they get the same experience. And they are much more happy with using fully digital, completed automated technology. But a large majority of business owners, talk about borrowing the upward of £250,000. It's not as simple as applying online and then forgetting about it. It is a lot more involved. And so within our world, in kind of established SMEs and larger businesses, or larger SMEs, I should say, I think technology needs to be an enabler rather than a replacement for what you would normally offer in relationships. And we can see that, right? You can use certain types of technology to really make it easier for us to serve our customers and partners and other people in the market. And equally, it makes self-serve available to those who want it. But actually having that person there to really work with the business owners is as critical in our world, particularly in things like lending, etc., where it is a more complex kind of discussion and lots of considerations that I think technology is a far way away from replacing that human touch in my mind.
Yeah, and I think you're right, as a consumer, you perhaps don't necessarily want or need that human touch. You want a quick, easy process that you can do in front of the TV of an evening. Whereas as a business, you've got individual plans and ideas and you want someone to take the time to understand that. So it's, as you say, using the technology to enable rather than replace that relationship. Yeah.
It's a smart assistant kind of, that's how I think about it, right? So it helps the people be more effective with their customers and partners and taking that forward.
Yeah, absolutely. And I think a lot of where I see technology really having value for businesses is where it's replacing perhaps some of the more administrative tasks rather than the human relationships. And we're starting to see a lot of accountancy packages at the moment upgrading their ability to interface with bank accounts and automate the mundane so that the SME can really focus on actually the bits that are important to growing.
Exactly. Yeah.
Thank you. So moving on, what do you think the trends that we've seen over the past few years in artificial intelligence are going to do for all finance and particularly obviously business finance? I mean, we're seeing ChatGPT able to generate Excel formulas and create emails and be used in marketing tools. What role do you think AI as a wider concept can play in commercial banking?
Again, I think AI can really help with improving the productivity of a lot of people in banking as they work with their customers and across banking really. So in lending, and obviously I look after the lending side and particularly two use cases where we see this being really helpful, but still helping us be better with our clients, I guess, is the most obvious form is in data. So obviously lending is about assessing data and doing something with it and taking decisions based off that. And I do think the likes of AI, and AI is a bit of it means lots of things to different people, I think. So AI in the broadest sense, but in particular using models and machine learning and data models really. I think it helps quite a bit in simplifying the assessment of simpler cases and actually freeing that time up for someone to take the more difficult calls where we don't want to be a tick, 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 off you go, yes or no. We are actually taking time to decide based on other information, which I don't think right now models are necessarily capable of or trained enough with to take commercial lending decisions. So I think we are seeing this in the likes of asset finance, where smaller tickets, simpler loans get almost instant decisioning, which is brilliant from a customer experience perspective, but also allows the bank then to really focus on the larger ticket, or not even larger ticket, but more complex, slightly, different cases that we get in lending to make those slightly more judgmental kind of decisions. The other area is actually, again, just consumer experience or customer experience. You've got loads of documents, right? So everyone has documents, PDFs, Word docs, accounts are in PDFs, valuation documents we get back are in PDFs. It's a lot of documentation there. And actually with the likes of ChatGPT and what it can do, it can really help read those documents, 50, 60 page documents, and distill the information really easily for someone then to pick up and do something with. We're seeing a lot of that. And you talk about products like bridging, where you really need to bring down the time it takes to turn things around. Tools like this can really help the banks significantly improve their turnaround times, the customer experience they gave, and productivity for the banks as well. So those are the areas where I think chat GPT, data models, etc., can really, really help, while not necessarily moving away from the fact that it is a complex area and you need some additional kind of resource looking at it as well.
Yeah, absolutely. And I think one of the things, certainly for me, when I first heard about advances in technology and using AI in our industry, I thought, well, how can we look at automating or even using AI to replace underwriters or bank managers or brokers or those roles? So I guess what you're saying is it's more about simplifying and automating some of the perhaps more mundane aspects of that, so that we can actually use that expertise to focus on the areas that we need to.
Yeah. And it upskills the people we've got as well. So in our teams, for example, we have people who are doing data entry, but actually that's not what they want to do when they're in underwriting teams. They actually want to be assessing the risk using analysis and so on, rather than actually doing the admin tasks of data entry and so on. So it really takes away that element, I think, and it allows us to upskill our people as well.
Yeah, absolutely. So when you think about the future of AI, how do you think that it will over time impact the roles that we as people play in lending? Do you think it will mean that there are cases where we can perhaps look to step away and almost leave the technology to it? Or do you think that there's always going to be a need for that involvement?
Again, I think it's an evolution of where we started, right? So I think the simpler cases, I think there will be low-hanging fruit, which can be fully automated from a decisioning perspective, from a, possibly end-to-end lending perspective. Because if it is pretty straightforward, pretty standard, you can go through and use technology more and more. But I think actually the biggest benefit will come in to freeing up people to do the more complex stuff. I don't think we are anywhere close to being able to do all of that through technology today. I also think what we were talking about earlier, I don't think people necessarily want to just deal with a machine when they are looking for almost even advice on structuring the deals better and, things like that. That's not really where we are with the technology we have. I think it might get there one day, possibly. Yeah. I think, the advances you're seeing are really, really fast now. In the last few years, we've seen a lot of advancement. I just still think we are quite a way away from that replacing completely the need for someone to look at the more involved cases, in my mind.
Yeah, absolutely. I completely agree. So moving on, what are some of the key innovations that we're seeing make a difference in full service banking for brokers and for consumers? So
I think, there's quite a few specific areas where specific types of technology are helping. But I would probably categorize it into three broad categories of things that I've seen really help improve the kind of end-to-end processes and the system capabilities that we've got. I think the first thing, and this has been going on for a little while, so this is not new, is the use of APIs. So this is just systems being able to talk to each other without having to take information from here and enter it there, right? So this is just simply plugging in systems and allowing them to work together. And you mentioned accounting packages. So, people like Xero, Sage, etc., they are building at their end to make life simple. Banks are building at their end to make sure we are able to talk to them much more easily. So for current accounts, that's a huge win for SMEs, accountants. It removes the need for an accountant or an FD or a bookkeeper to actually type out data, and it allows them to move one step away from that and do something with the data. On the lending side, similarly, we get information automatically from various data sources, and it prevents the need, allows the brokers not to have to enter stuff. It allows our customers not to have to enter stuff because we can get it more easily and more quickly, kind of automatically. So I think that the whole systems talking to each other and the whole API first type technology is a big win for banking more generally, especially since we form part of various ecosystems for an SME, right? So our data goes into lots of their systems. So I think that's a very big win. And then the second thing is using that data And that's where we were talking about, models and, asset finance being another great example where it is really good to see that at the smaller end, you are able to just generate auto decisions and, within 24 hours, you've got the cash in the bank and off you go. And it is quite a step change from where we were 10, 15 years back, right? So that industry has already come a long way and we will see more of that. So I think data and the use of data definitely is improving. And finally, I think general automation, right? So, these two thematics help, but it's also general automation where you've got robotics on the one hand, where the systematic, the same kind of process that you need to pick data from here, put it in there, go to the next step, etc. You can actually just automate some of those steps quite easily to get to a much slicker, much quicker experience. So I think a lot of this just basically improves customer experience on the one hand and risk management to some extent, because you don't have manual entry, you don't have errors, you don't have rework. So all of that, I think, the whole automation and data kind of go hand in hand in my mind.
Yeah, and I guess it's not just like you say, it's not just at the point of origination, but if you've got ongoing monitoring as part of the lending agreement, if you can look to automate that, it frees up bank time, but also frees up the customer's time to, spend running their business rather than
giving us lots of reports, right? Exactly. Yeah.
Yes. Yeah, absolutely. And just lastly, we're talking a lot about data sharing and data availability. Do you think it's going to get to a point where, consumers or not so much consumers, but business customers are almost able to automate a lot of the data fill for these sorts of things, and between their accountancy package, their Experian or Equifax record, it is just a case of being able to serve data to lenders and other counterparties?
I mean, I think we've started along the data sharing and, open banking became kind of open data almost, right? So there are all of these, whether it's accounting data, banking data, e-commerce data. So there's a lot of sharing of that for various lenders that provide working capital and unsecured lending. So there's definitely a move towards making data a lot more democratic, as they say, to allow for easy access where you want to give. So it's very, very important that the SME still retains control, right? So it shouldn't become something that data is out there and, for all to use, whether they like it or not. But I do think we're getting to a point where it's much easier for an SME, for a business owner, for consumers to, I think probably has been there for a little longer, but for businesses to share their data a lot easier. It's never fun, like you said, even in, ongoing in life of a loan. Oh, I have to give this management data once a month. I have to remember. I have to get someone to do it. I have to reconcile. There's just a lot of friction in the process without the ability to share. There is still a large majority of, not majority, but a large portion that use systems that are not necessarily easy to share. So I think we're still not quite there in terms of everyone being able to, but I think the tools are out there now that allow people that want to share easily to be able to share easily.
And I guess some of that comes back to what we were saying about, organisations operating perhaps with older systems aren't able to upgrade to a level to make that sharing available.
And that's true on the SME side as much as on the bank side, right? So, yeah.
Yes, yeah, absolutely. And last question, I guess we've talked a lot about the differences between retail banking and business banking. Do you think we'll ever get to a point where business banking catches up and overtakes consumer?
I guess it depends on what you mean by that. So given that business banking is more complex, if it gets to even parity with retail, I think that's overtaken, right? Because it's much more complex to build for businesses than it is for retail. Will it ever overtake? I think the breadth of offerings is much wider in business just because there are so many different types of sectors that have unique needs, etc. So over time, I can see specialist providers in these sectors then really making business banking and business finance more generally much, much better.
Thanks for that, Niv. That's been really interesting. Thank you for joining us, and please join us again for the next Allica Brokercast.
Thank you for having me.